Good morning, traders. It's Monday, December the 18th. Taking a look at the charts, let's go over the cycles for the week and where the bias is likely to be. Overall, if we take a look at the cycles here, we got some choppier point times ahead here, which is what we've been seeing with price action in general. We're starting to see some long rallies, sharp pullbacks, rallies, pullbacks, big rallies. And we're getting into this kind of topping kind of volatility where volatility starts to pick up, market chops around, and even though we've got cycle potentially kind of pointing to lower highs here, this can very easily continue to move up until we get to one of these big downdrafts here. So we could very easily see the market continue to show some weakness here and chop around until we maybe next week here we could see a little bit of potential selling or come the new year. So we still have another week or so of potentially higher prices. This is the SP 500. If we take a look at the excuse me, the leading kind of index, which is the Nasdaq. If we take a look at this, you can see same type of thing, still pointing to higher prices, and things will probably continue to get a little choppier. And then we kind of go into potentially a more significant kind of pullback, which we are in a strong uptrend. So the pullback could be nothing more than a week and a half, 2 weeks of kind of sideways chop, something similar to this over here. You could see it chop for a month or so, or it could just end up being a week-long kind of drop in price for the market to reset, and then of course how it recovers from there is something we need to see how it unfolds. But at this point, market is still in an uptrend, and the market may not top out until really we get to one of these downdrafts. This leading sector here, the Nasdaq, is pointing to higher prices, and the technology is kind of the real leader. You can see here we're actually about to start another potentially push up here, push higher in technology, which will pull the Nasdaq up and outperform it, while the SP 500 is set to struggle a little bit more than the Nasdaq. And if we take a look at the Russell 2000, Russell 2000 is kind of already showing that it's kind of topped out, and it's got a downward bias here for a while, very similar to what we saw over here. We've got a pretty long sustained pullback, and price just kind of flutters and grinds itself lower until more or less the market resets, and that's kind of where it's at now. And small caps typically lead the way, so we're starting to see these kind of underperform. Looks as though it'll continue to kind of fade sideways and not really take off in any big way, while the last of the leading sectors, technology more or less, continues to maybe have that final push up and really squeeze higher into the holiday season here. If we take a quick look at utilities, which we've been watching a little bit here, we saw how it was selling off here with this big sell-off, how we talked about it looked like a top. Then we more or less cycles kind of topped out as well. We saw another big bout of selling. We saw these 4 inside days, meaning these bars were inside the big down bar. When you have inside days like that, typically it means you're going to see the continuation candle, which was this big red bar, back down. And we've been kind of grinding our way lower with these little doji candles going forward. It's kind of losing its momentum or picking up speed to the downside. And we could continue to see it kind of flush down over the next few days as people kind of move out of the safe havens and into the leading sectors like the FANGs, the technology, and other hot things like Bitcoin, which everyone is piling into. If we take a look some other safe havens, here is the daily chart of gold. You can see here cycle more or less bottomed out, and potentially it's struggling at the first level of resistance, which is what we were talking about. Gold's moving up today a little bit. Looks like it's on the verge of kind of breaking and popping. It has potential to continue to run up. Doesn't mean it's going to run up to this level by any means. It simply means there's going to be an upward bias, and gold may only rally up to this 1280 area, 1270 area, and it could easily stall out there. It's somewhat in a downtrend here. We've got lower highs, we've got lower lows, and it needs to kind of break that level and really bust above this 1290 or 1300 level for it to really kind of re-grab the uptrend and have some real momentum behind it. But overall, you can see the bias here. The safe havens, money should start creeping in, continue to creep into the safe havens through the holiday season here as a kind of a safe play to go. And with small caps showing that there's weakness, so we might have some smart money rotating into these safe havens. And if we take a look at silver, Silver, same type of thing. Silver and gold and miners, they're all building this foundation. They've had a nice pop. They're consolidating in a tight way. The cycles are pointing to the upside, so there might be a good chance here for a significant rally in silver back up to the 1660, potentially 1700, which will be a fairly, or $17 be a fairly significant rally, and also a very significant resistance level right through the heart of all this noise and consolidation. If we take a quick look at gold miners had that big pop. They've been flagging here in a very tight pattern. They continue to hold tight. They're trading relatively flat or lower today. But again, we're seeing a little bit more potential downside in the miners. They have very clear downtrend, lower highs, lower lows, and we really only have a few more days where we could see these potentially pop up or continue to trade sideways as the 20-day comes down over it, and we're stuck under this resistance level from these lows, and there's potential that gold miners could come down and potentially put in a double bottom going forward here before they put in more or less a more significant rally in place. But overall, short-term basis, it's bullish, but it is stuck under resistance, has a tight little bullish formation, and we'll just see what the metals and miners do. At this point, the metals themselves actually look more bullish than the miners. Looking at crude oil, here's the chart of crude oil. More or less, the cycles have kind of gone dormant. They're kind of just a whole bunch of mixed cycles, which is when they flatten out. You've got a bunch of them fighting each other, some going up, some going down. And so we're in this consolidation phase, which um, is kind of what we've been expecting. We're anticipating a final squeeze up to the 62, and you can see here there's a point here over the next week and a half. 1, 2, 3, 4, 5, 6, 7, 8. Over the next 2 weeks, more or less, there's potential where enough cycles line up that we could see this consolidation continue to kind of flatline here, and then we could see a quick pop and squeeze up to that 62. And again, that 62 area goes way back to 2015 to a major top, at which point, if it's tagged, we could see a pretty significant quick pullback, probably down to this 58, 57 level very quickly if that is tagged. So we're keeping our eye on this. We still have a series of lower highs. We got a little bit of a mixed signal at this point. We've got a potentially higher low here. If we can pop and move above this high, that would put us back into more of a neutral, a little basing formation. If it breaks the second high over here, that would put us back into an uptrend and give us an impulse move up to that 62. So all this could play out over the next 2 weeks with the price of crude oil, and we could be looking to get long for this pop, and also take an inverse play to get short when that level gets hit for a very sharp drop as well. We've been kind of waiting for this for a couple months. We've been seeing the price kind of run up, consolidate through this area here, and now we're waiting for this final kind of break and squeeze to kind of a reversal. Last but not least is the daily chart of natural gas. It's had a pretty precipitous fall, really picking up speed, starting to show signs that we are at a reversal level where we had a final kind of flush down here with a very sharp reversal back up to close above the last more or less 2 candles here. And cycles show that we should be chopping around. We could see increased volatility, and there's potential here for a pretty strong knee-jerk reaction to the upside. Now, if we zoom way back in time, you can see we've got this pretty significant level right across here where price should find more or less support, and that's right where it's more or less tagged and chopping out here. We talked about this a long time ago, that if price came down to this level and we tag it, the level more or less is the lower yellow line here. If we can see it kind of flush down and tag this level over the next week or so, could be a great opportunity to get in for an oversold cycle low kind of knee-jerk reaction bounce back up. Could see it come back up to this 3 mark, or even the 290, or potentially all the way back up to the 320, depending on how strong that move is. But it gives us a good opportunity for a very strong rebound play, and we'll see if we get kind of a bottoming formation, a longer lower wick, something that pierces down into this yellow box. We're very close to tagging it, have yet to really get down, go through that level yet, but the market likes to come down and pierce those levels and make nominal new lows, and then have a strong reversal to the upside. So we're keeping our eye on a strong reaction, a bottom here in natural gas, just for a knee-jerk reaction play that could only last a few days. or a couple weeks at most, and then it could come back down. And we are looking at it potentially if it breaks below and holds below this level for a short position or an inverse ETF to the downside. We could see it head much lower. Anyways, that's it for this morning. Talk to you in a little bit. Bye bye.